Hello and welcome. This is Business Morning. Thank you for joining us. I'm Chimeze Obi Iwago.
And I'm Ini John Mekwa. Thank you so much. Well, we start off with members of the organized labor. They staged a protest across the country yesterday, challenging the bill seeking to amend the National Minimum Wage Act. The bill seeks to transfer the subject matter of minimum wage prescription from the exclusive legislative list to the concurrent legislative list. Well, let's watch this.
Members of the organized labor in Bayelsa State taking to the streets of Yenagoa. They're joining the national action against the proposed legislation to remove the minimum wage payment from the exclusive to the concurrent list. Their visit to the State House of Assembly is not in vain as they get a promise of support.
We are here to make laws that will improve the lives of Bayelsans. And as soon as such a bill gets our assembly, definitely we will do the needful. I want to encourage them to go about their protest in a very peaceful and lawful manner.
Policemen joined the protesters in Delta State as they marched their way to the State Assembly. They want the federal government to focus on other matters.
Why are we not making laws to develop our people? Why are we not making laws to improve the welfare of our people? Why are we not making laws to improve the working conditions of Nigerians?
So Mr. Speaker will receive your speech. Mr. Speaker will talk with his colleagues. And when that time comes, if at all it gets here, the amendment bill gets here for ratification, Delta will make history by standing on the path of truth.
Armed with placards showing their demand, the Labour members march in the streets of Ibadan, the Oyo State capital, to demonstrate their displeasure with the bill. It's not a futile effort marching to the state legislative complex, where the leadership of the assembly promises that the bill will not sail through the state chambers. In Ogun State, the protesters marched through Abeokuta, the state capital. They promised to oppose any attempt to decentralize the minimum wage. The days to come will determine if these reactions will affect the passage or rejection of the bill.
You know, I wonder why this issue of minimum wage, 30,000 naira, should still be an issue. Remember, it was from 18,000 to 30,000. And I don't know why it should be an issue, paying the workers, you know, when 30,000 naira, considering
the inflation.
Exactly. And then, I mean, I understand what they're agitating for. Why should they talk about removing it from the exclusive list into the concurrent list? You know what that means?
That means
the
that
state governments
will decide
what they want
and
to
And
pay.
I hope it is also known that even at 18,000, some states were still owing.
Even less than 18,000,
yes,
some states would still owe. And then why would the state government say they don't even have money? What happens to the money from the VAT, 7.5%? What happens to the money from, you know, the exchange rate, the pass-through effect of the exchange rate? I mean, they can't just say that they don't have money to pay 30,000.
And you know, when you look at Nigeria, I mean, yesterday we discussed the non-oil exports, and we talk about agricultural potentials. We have a lot of mines and steel
that
and
this state governments can
need to
actually
explore, you know, for internal revenue, which is lying
fallow. But we seem not to be doing the right thing, really, and it's high time we started, you know, doing the right thing. Look at, in the US, the minimum wage, as it is, $7 per hour. And of course, the Biden administration is talking about increasing it to $15 per hour. You know what that means? 8 hours. Multiply that, $120. That multiply it by 480. That's almost 60,000.
So little wonder drain
keeps
increasing. I mean, little wonder.
this government needs to do something. Okay, in the meantime, the National Bureau of Statistics in its COVID-19 impact monitoring report says about 17% of non-farm enterprises remain shut due to the adverse impact of COVID-19 as of December. Now, the report says even with respondents back at work, evidence of churning in the non-farm enterprise sector suggests people's working situations remain precarious. Around 17% of households who had non-farm businesses during 2020 were not operating their businesses in December 2020. Of these, 61%, that's 11% of all households with non-farm businesses, had also been closed for at least 1 month between June and November 2020. Moreover, just 23% of households with non-farm businesses in 2020 operated them continuously since the peak of restrictions in April and May. Now, the summary of the report showed that the households have become laxier regarding safe practices, with a share of respondents washing their hands after being in public or most of the time dropping from 83% to 73% between July 2020 and November 2020. Yet, it says, access to hygiene-related basic needs increased between July 2020 and November 2020, with a share of households having insufficient soap to wash hands in the last 7 days declining from 24% to 11%.
And then we go to global oil markets, where prices recovered overnight and traded up during Asian trading hours today. U.S. crude rose 0.76% to $64.93 a barrel, while global benchmark rose 0.71% to $68.38. The moves in oil prices came despite a sizable jump in U.S. crude inventories following last month's winter storm in Texas. Some analysts say oil's overnight gains came after U.S. gasoline stockpiles fell sharply last week. The fall in U.S. gasoline stockpiles over the last 2 weeks is the largest two-week decline on record. Analysts say rising U.S. oil supply is a key negative risk for oil prices. However, it's unlikely that rising U.S. oil supply will offset OPEC Plus supply discipline and the ongoing recovery in the global oil demand as COVID-19 risks fade.
Okay, the National Bureau of Statistics this week released the foreign trade data, which showed total trade was 8.9% higher in the fourth quarter of 2020 compared to third quarter 2020, but 9.9% lower than the value recorded in fourth quarter of 2019. On an annual basis, total trade was 10.3% lower in 2020 than the value recorded in 2019. To talk more about this and other issues, both in the financial markets and the oil market, Akintoye Oyelaku, investment analyst at Cordros Asset Management, joins us next. All right, Akintoye Oyelaku now joins us. Good morning, Akintoye. Thank you very much for joining us. Well, talking about the foreign trade statistics, based on that report published by the MBS, total trade fell 9.9% year-on-year in the fourth quarter. That's despite the contraction. Imports climbed 10.8% year-on-year to 5.3 trillion in the fourth quarter, relative to what was recorded in the fourth quarter of 2019. Now, regardless of the pandemic, we saw this higher records. What was the major driver of the significant increase we've observed in the import data?
Good morning. Thank you for having me. So, based on the statistics that we got from the CBN, like you rightly said, despite the fact that total trade for Nigeria contracted in full year 2020 compared to the previous year, we saw that imports rose significantly. And the major driver of this increase that we saw was the inflationary pressure which was present across the world due to the COVID-19 stimulus that most governments were implementing to support the economy. So as a result of this, we saw that the import of manufacturing goods, which contribute around 64% to the imports trade for 2020, it grew by 6.5% year-on-year. Also, when you consider the fact that in 2020, we saw multiple devaluation of Naira across the exchange rate windows. This also supported an upward trend. So putting those factors together, we saw that import figure rose significantly despite the contraction in trade for 2020.
Well, as against what we observe in the imports data, the value of export plunged by 33% quarter on quarter to 3.2 trillion naira in the fourth quarter of 2020. In the same vein, full-year export declined sharply by 34.8% in 2020 when compared to 2019. What was the major driver of this decline, and what should we expect this year?
All right, so for the export side, crude oil remains the major component of our exports. Historically, it contributes around 80% to the country's export. So in 2020, due to the COVID-19 disruptions, weaker economic activities as a result of the global economic lockdown, which led to sharp contraction in demand for oil. And also we had high inventory level, and not to forget the OPEC plus output quota. All of them which resulted into lower oil prices. So if you combine all these factors together, this led to a sharp contraction in oil export. And given the weight of the contribution that the oil export has on total export, we saw that it pulled down the export figures for 2020 compared to what we had in 2019.
Right, if we are still looking at that statistics and talking about now the deficit there is about 7.38 trillion naira. Is this a concern for you as an investment analyst?
All right, so majorly we know that the major driver of this deficit that we saw was the COVID-19 disruption on both supply and demand chain. So we saw that in 5 consecutive quarters, we saw deficit recorded in the foreign trade statistics for the country. And if we consider again that 2020 is an outlier, given the fact that we had disruptions of COVID-19, and then we are back to a close to pre-pandemic levels now. Economic activities are improving. So we expect that in 2021, there's going to be an improvement in terms of foreign trade figures for 2021 relative to 2020. This is due to the fact that economic activities are improving, oil prices are recovering, vaccine rollout, and the fact that we expect that at some point in time, OPEC is going to ease the output quota, which is also have a positive impact for the country's exports or trade figures for 2021. So we expect to see an improvement in 2021 generally.
Well, we keep talking about non-oil exports, but crude oil still continues to dominate the country's exports by a disturbing margin, accounted for 9.44 trillion naira last year. That's an equivalent of 75% of the total value of exports. So does this say that Nigeria is not doing enough to push its non-oil exports?
Well, that has been the story since the discovery of oil. Nigeria has been dependent largely on crude oil, and that's why whenever there are shocks in the crude oil market, Nigeria is always suffering from it significantly. And you know, the dependence of oil has led to weaker development of the non-oil sector, and developing those non-oil sector will be very critical at this point, given the fact that the world is in a phase of global energy transition. So everyone is trying to move away from fossil fuel like crude oil and coal, given the negative impact it's having on the environment. We are seeing hotter temperature, sea glacier is melting. We are having high level of flooding across regions, across the world. So a lot of countries are moving towards adopting renewable energy, and we are seeing improvements in technology. And what this means is that if Nigeria does not diversify away from dependence on oil, by the time we are going to see that transition, Nigeria will be significantly affected by that transition due to the exposure to the oil sector.
Now, on Wednesday, we saw Brent price tapering marginally to about $66, even though it went up a little bit this morning after reaching a peak of $70. That was on Monday, as investors booked profit ahead of the release of U.S. inventory data. Now, with the OPEC plus quota still in place, how much do you think this would be sufficient to keep the oil market stable?
All right, so OPEC has continued to hold a major stake in terms of when you look at the market share for the oil supply globally. In 2019, OPEC had around 35% market share, although the U.S. is also a major force when you look at the fact that the U.S. is the biggest producer of oil across the world, and also the fact that the fracking technology has supported this this trend for the U.S. So the U.S. contributes around 19% to the global oil supply, judging from 2019. So the U.S. also has a major role to play in stabilizing the oil market. If the U.S. should increase production, it will definitely affect the price of oil in the market. However, given the fact that also the U.S. suffered from weaker oil prices in 2020, I think the U.S. will be cautious about increasing its production. We're not likely going to see a surge in U.S. output, given the fact that the fracking technology is quite expensive to produce with. So the U.S. will also be looking at improved prices. So we believe that with the U.S. output, current output level, and OPEC Plus quota being maintained, and vaccine rollout expected to continue to improve in 2021, we expect that this will be key to stabilizing the oil market in 2021.
Well, coming back here in Nigeria, still following the OPEC Plus meeting, about 300,000 barrels of oil from Agbami has now been classified as condensate, increasing the opportunity to boost production in a high oil price environment without breaching the OPEC Plus quota. In what ways do you think this would impact Nigeria?
All right, so the concentration of Agbami 300,000 barrels per day as a condensate is quite positive for Nigeria. If you recall, in 2020, we had weak production of oil due to OPEC Plus quota and weak demand globally. And with this improvement in condensate that we are going to have, we can produce without necessarily breaching the OPEC Plus quota agreement. We are going to see a quicker recovery for the oil sector in subsequent quarter compared to what we had in 2020. So this is very positive on that aspect. And also, if you look at the fact that it's going to the oil sector, the oil commodity is a major component of the oil of the export for Nigeria. So an improvement in production will also support export value for 2021 compared to what we had in 2020. Again, government revenue is largely tilted towards the oil sector. Around 65% of government revenue is from the oil sector. So an increase in output, given the fact that we have high oil prices, will definitely support revenue for government. And lastly, when you look at the external reserve balance, the oil commodity is a major boost for the foreign reserve. We expect this to boost the external reserve, and the central bank will be able to support the naira across the exchange rate windows.
All right, thank you very much, Akintoye. We do appreciate your time always. Do have a great day. Okay, commodities market update is next. All right, Bolanle Agbaje, one of the research analysts with Financial Derivatives, joins us now. Good morning, Bolanle. Good to see you again.
Good morning.
All right, I'm sure you were listening when we were talking to our guests. We just talked about the latest foreign trade statistics. Yes. From all indication, of course, oil continues to dominate Nigeria's export. So how do we begin to improve on our agri-commodities to change this narrative?
I think what calls to question is just the level of implementation. So far, for the past few years, we've had a lot of plans, talks, the government, investing money, to try and boost different types of agricultural produce within Nigeria. But we have not necessarily seen the impact of this when it comes to our trade. And I think it also calls to question other aspects. So it's just not the production of, some of these agricultural products. It's also,
the value chain.
The value chain. So that, calls to question, is it easy for some of these, producers to export this particular product? And quality is also a major issue. I think earlier this week, we had seen, Kenya reject some agricultural produce from Uganda Uganda and Tanzania, just because, of the quality issue. So quality remains a major problem. Storage, distribution, those are some of the factors that, calls to question. The value chain is an important aspect when it comes to agriculture.
Well, still talking about oil, we've seen the oil volatility, we've seen the OPEC Plus, keeping the quota. How do you think this will help in stabilizing, the oil market in Nigeria?
For now, our hands are tied because we can't necessarily increase our production quota, which more or less affected our exports in 2020. But I think ultimately the goal is to increase oil prices, and I do believe that once, we're already seeing the benefits of that, but once oil prices get to the $70, $80 per barrel, would more or less benefit from that as via our export revenue in the nearest term. And also, I read something saying the government is focusing on the Dangote refinery as well. It's supposed to come into play very, very soon, and that should obviously change things for Nigeria.
Yeah. And Saudi Energy Minister said yesterday that OPEC Plus is aiming for a fair price for crude oil. So what would you consider a fair price right now? We're seeing oil now hovering around 68, there's still that volatility, and there's some projections that it could get to $80?
Not to be too optimistic, I don't think 80 would be a fair price. At least, when you're looking at what the fair price should be, you have to, take into account, other aspects of the economy. We're seeing a pickup in economic activity. We don't expect the full impact of the vaccine rollout to, be in effect until the end of the year. So it's necessary to, put that into consideration. I think a fair price should be looking between $70 to $75 per barrel, at least till the end of the year.
Well, a higher price there is supposed to be good news for Nigeria, but now we have the external reserve going down to about $630 million this year alone. I mean, how can we explain this sharp fall?
Well, obviously, this sharp fall has, it's as a result of the fact that we're not building in, our reserves as much as we're taking out. The CBN is also still intervening in the exchange rate market to kind of, monitor what happened in that market. We're not seeing a lot of inflows, as that's obviously last year and continuing this year. We're not seeing a lot of foreign investment inflows. Remittance flows, with the promo that the CBN had done, we haven't really seen, it calls to question why they're doing that as well, to increase our reserves. But ultimately, I think in the nearest future, we should see an improvement in our result. But for now, the drawdown of about 630 million is significant.
It's very significant, yeah. Now, but then you talked about the promo. Yeah. And here we're seeing the Naira continue to fall, 484 now, that's despite this promo.
Yes.
So what does this signify?
Well, this was taken into effect on Monday, and it would just mean that we should give it time, because you need to give time for transactions to take place. I don't think transactions usually happen in one day, and the impact of those transactions to be actually felt in the markets. I think that's why the CBN gave at least 2 months to see how this translates in the market. So we do hope that at least from next week or the week after, we should start seeing some impact of this promo. Or if we do not see any impact, then it will mean that the exchange rate is resilient to change to the promo.
Yes. But what would this mean to the commodities? The fall in Naira, the promo, the fall in foreign reserve. What does it mean?
The sad thing about that is we'll definitely feel that on our commodity prices. We had seen commodity prices increase significantly, and a lot of that has to do with our exchange, because we do import some of these raw materials to produce some of those, products. So we definitely it's definitely bad for commodity prices if we don't, see any change soon.
Now, we have seen the issue of minimum wage, coming up. We've seen a lot of protests and, go around the country and all that. With this minimum wage thing, and where do you think it's heading to, and what would it mean for commodities prices?
It was definitely going to come sooner or later because disposable income is squeezed significantly. So, you know, most people, individuals are not happy, and you know, they literally call into question what, you know, they would do to increase, you know, increase the living standards. So I'm sure, obviously, the government, I don't know how far the government can meet their demands at the moment because, you know, our revenue is squeezed, but it's something that, you know, I'm sure, well, we're not necessarily surprised to see the protest happening.
Well, from the price movement, we see cassava flakes, known as Gary, one of the staple food in the country, going up, and it's attributed to shortage
of cassava.
What's going on?
Well, it would still play into, you know, what's happening in the north. Obviously, we had seen that they have, you know, more or less solved the insecurity issue, but you definitely have little issues when it comes to, you know, releasing of some of these agricultural products from that side of the country, and, you know, the shortage more or less to do with transportation and so many other things that do increase the cost for major producers in that side of the country has also increased, you know, the price of Gary. Gary has increased to about 13,300 naira per like 50 kg bag. Wow. It's a major staple, so it's a significant, you know, product.
All right, as the weekend wraps up, so what's the price movement like on the domestic commodities?
Generally speaking, right now we've seen decline in majority of the products of commodity products on our list, but we do expect that, you know, with the commencement of the planting season, we expect that, you know, these particular products or some of these commodity prices would increase, and also the demand from, you know, the Easter period as well.
And what's the outlook for commodity prices next week?
Next
agric and oil.
Yes, so with oil, we expect that oil prices would fluctuate around $68–70 per barrel, except something, you know, out of the ordinary happens to, you know, production or oil demand. With commodity prices, we don't expect huge fluctuations, but definitely, you know, some slight changes, whether, you know, up or down.
Yeah, and also there on your slide you have Tanzania gold exports are rising. What does this mean for Nigeria?
It just means that, you know, we're not obviously benefiting the way Tanzania is benefiting from this, you know, particular increase in gold exports. We do have gold, but the mining sector is literally subdued, and you know, I think it only contributes about 0.3% to GDP. So it just shows you ways other countries are literally moving ahead when it comes to, you know, increasing their exports within their countries.
You know, Jimmy, this is part of what we're talking about. If only our state government
can actually
look inwards, I mean, and explore some of these natural resources. I mean, paying 30,000 naira minimum wage would not be
oil
a
has
problem.
taken over everything, so nobody is looking at the other ways of making money. But I just pray that we get it right in this country. All right, thank you very much, Bolale.
Thank you for having me.
All right. Okay, let's look at the markets now with Eddie. Well, Eddie, there seemed to be some kind of, will I call it, just like your name sounds, ding-dong movement there. We saw some kind of rise there.
Yes, Jimmy, you're right. Well, analysts have been saying that this is what we should be expecting in the market. So we're not so sure if, you know, this positive sentiment to continue. Today, we're likely to see people take profit in the stocks that gained yesterday. So just like you said, the ding-dong movement is likely to continue in the market. And yesterday's gains were largely due to bargain buying on the shares of Dangote Cement and Nestle. And you know what they say, when Dangote Cement sneezes, the market feels it. That stock was up by over 3% yesterday, and that, you know, that of course, you know, changed market movement. Yesterday, the all-share index was up 0.63%. at 38,931.25 points, while the equity cap was at 20.369 trillion naira. Now, the month-to-date returns moderated to about -2.2%, while the year-to-date returns moderated to about -3%. 0.3%. Now, we saw lower turnover of volume, value, and deals traded yesterday. Volume was lower by about 24% to 368.21 million units. Now, we recall that in the previous trading session, we saw higher turnover of volume, value, and deals yesterday. Valued was at 4.90 billion naira, and all of that was traded in 4,437 deals. The sectoral performance was mostly positive, apart from banking sector and oil and gas, which declined. Before, what happened on industrial goods? Let's talk to Kayode Olayemi, a stockbroker at TSL Securities. Good morning, Kayode. Thank you for joining us on the program.
Good morning. Thanks for having me.
Yeah, we saw a lot of activity or huge gains from Dangote Cement yesterday. Was it all just bargain buying, or is there more that we should know about that stock?
I think what happened in Tanzania yesterday was about a cost of about 2 million shares. We saw local investor interest in that stock. We know the company is currently in their closed period. They're expected to have their board meeting next week, Thursday. So the sense is that local investors just looking to take position in the stock ahead of earnings. After 9 months, their revenue was up by 12%. Year on year, and the earnings were up about 35%. So just positioning in that stock ahead of full year results for next year.
Well, I mean, I understand that investors are positioning, ahead of whatever goodies will be coming from that. But, for the banking sector, for example, now we've seen few earnings come into the market. UBA released its earnings, but for the bank, it wasn't so good. And we've seen investors, continue to sell off on that, even if the company is declaring dividend. Why is that?
In the case of UBA, what happened there is there was a dividend cut. The numbers were good, but the management of the bank had to reduce the dividend, and there was a negative reaction to that. Typically in our market, a lot of investors sort of place a premium on dividend. So that announcement of the dividend cut wasn't welcomed by investors. So that we saw that sell-off in UBA, and that sort of sentiment then affected the number of the banks that are yet to release their numbers.
Okay, so how has trading begun today, and what should we be expecting, at least between today and tomorrow?
At the moment, market is still quiet. However, the Treasury bill auction yesterday, we saw yield on the 1-year paper go up by about 100 basis points to 6.5%. Past couple of weeks, we've seen that sort of outcome of the Treasury auction tends to dampen sentiment in the market. So the strength that obviously the market is looking for on the back of this continuous rise in fixed income yields.
All right, Kayode, thank you for your input on the program. Enjoy the rest of your day. Kayode Olayemi is a stockbroker at TSL Securities. Now back to the market numbers. For the banking sector, we saw declines from UBA, just like we had mentioned earlier, GT Bank and FBN Holdings. For consumer goods, that was driven by Nigerian breweries and Nestle. We saw more than 1% gains from those two stocks. Industrial goods were single-handedly lifted by Dangote Cement, and insurance was up while oil and gas declined. For the unlisted securities market, the NSI was down 0.63% at 706.11 points. While the market cap was at 506.65 billion naira. We saw about 300,400 units worth 4.53 million naira traded in 4 deals. Now, the bond market was bullish yesterday, and it was bullish the previous day as well, as we saw yields decline slightly in those two trading sessions. Now, yesterday we saw yields decline at the mid, long, and short end of the curve. We had 10 deals worth 2.57 billion naira. The Nigerian Treasury bills market was a bit quiet, but to talk more about the Treasury bills market is Oloruntoba Sowemimo, a fixed income dealer at FSDH Merchant Bank. Good morning, Oloruntoba. Thank you for joining us on the program.
Hi, good morning.
So there was a primary market auction yesterday. Could you tell us what the turnout was like and how that would shape trading today and tomorrow?
We had just roughly under 89 billion on offer. We saw that the subscription levels were still pretty much high, 220%, and it was across all tenors. There was significant demand witnessed on the 91 days, the 182 days, and the 364 days. However, the bulk of that came on the long end, on the 364 days, which accounted for a significant percentage. 125 billion of the total amount of 196 billion was what was subscribed for at the long end. And we saw that that particular security, the interest rate went up to 6.5%. The short and medium term remained flat at 2% and 3.5%. The reason for the increase on the long end was because of where clients had indicated that they were comfortable investing in long securities at. For the market, for the secondary market, we expect to see demand. That excess demand that wasn't good, 80 billion was sold at the long end. The subscription amount was 325 billion. So that 45 billion is still outstanding. We expect to see triples of that in the market today, while we expect that those that can wait for the next auction, which is next week, will do that.
All right, so since Monday, we've been seeing some activity on the CBN special bills. We saw activity Monday, Tuesday, and yesterday. Can you tell us what's happening, in that segment of the market?
Supply with regard to those securities, and the reason for that is liquidity in the market has been a bit tight. So a lot of counterparties have looked at that as an alternative to raise funds in the short term.
The bond market, we've seen yields rise in that space up until, yesterday and day before yesterday. I mean, is that the end of the rise in the bond space, or what's going on? Why are yields declining in that space?
So time will tell. The rates have gone up to such an attractive level that we haven't seen in a very long time. So a lot of institutions, a lot of counterparties have looked at these levels as very good, and it's a good time to buy. We've seen rates, as at last year, we had some securities at maybe 5%. They've gone up about 500-600 basis points, which is outstanding, and it's definitely a good time to buy. So we expect to see some more of that demand continue today.
All right, Toba, thank you for your input on the program. Do enjoy the rest of the day. Lauren Toba Shoremimo is a fixed income dealer at FSDH Merchant Bank. But at the automobiles market, at least we still saw the bullish run or the bearish run as yields in that space, rose. We had 15 deals worth 230.60 billion naira. But Chimi, just like Toba said, time will tell, because this fixed income market that we've seen yields rising and investors were running away from the equities to the fixed income, now we're seeing yields decline in that space. So the market is so unpredictable, it's very hard to say what's going to be happening in that space.
And of course, like you said, time will tell. We can only hope for the best, as I always say. Okay, we take a break now. When we come back, we do an opening call to London. Just stay with us. And now we go to London, where Juliana will give us updates of what's going on there. Good morning, Juliana. Well, 2 months ago, after the UK left the EU, survey shows 3/4 of British manufacturers are still struggling to cope with delays in moving goods in and out of EU amid continuing disruption caused by Brexit and the COVID-19 pandemic. What's the latest on this?
Well, yeah, this was to be expected, considering that a deal wasn't signed and sealed until Christmas Eve, which was way too late for manufacturing trade groups to get themselves ready for the transition period. And the manufacturing trading body Make UK has spoken to 200 leading businesses, and 74% of them say they are struggling with delays in importing and exporting. There are more than half of them are experiencing increased costs, and they just don't feel as if they're getting enough support by the government. In the past couple of months, Trade Secretary Liz Truss has been dotting around the world trying to forge new trade relationships with countries outside of EU, including Ghana. That was one of them, and Senegal, I believe, more recently. But lobby groups are saying they're not doing enough to sort out the issue within the border. I think I spoke to Laddie about this a couple of days ago, that even UK-German trade has slipped more than 56% in the month of January, and this is predominantly down to Brexit delays. A lot of businesses here in the UK have stopped exporting because of the increased costs. A lot of them are also citing the red tape and the new measures. The British government have responded to the claims that were made in The Guardian. They say that they are doing their best. They've put out a fund of £20 million to support small businesses within these new changes. And they also say, according to them, that the delays at the borders are no longer there. They're back to their normal levels. But obviously, considering the survey by Make UK, business leaders don't feel the same way.
Well, in corporate news, M&S will start selling clothes from 11 rival brands on its website this spring. Why is M&S embarking on this strategy?
Well, it's similar to what we discussed earlier this week. Marks and Spencer, you know, they're trying to keep up with a lot of these younger online brands like Boohoo.com, Pretty Little Thing, ASOS. There are so many of them that have done exceptionally well during the pandemic. A lot of these old retailers have seen, especially considering stores have been predominantly closed over the past 12 months, that their online sales are surging. And in copying what a lot of these other younger brands are doing, they are going to start selling different clothing brands online because it can attract a much larger female audience. M&S clothes are pretty popular here in the UK, but not as popular as some of the other ones. I think they've been caught up in a little rut, and they're trying to get themselves out of it. They've started this new strategy called Never the Same Again, and that's exactly what they're trying to put out now. They've increased their online market share. They'll now be in about 46 other different regions across the world to just try and grow this ever-increasing e-commerce market.
Wish them on the best, staying never the same again. But what should we look out for today as the day unfolds?
Well, there's a couple of big corporate stories. A massive business story here in the UK today is about John Lewis, the retail giant. They've posted losses of up to £600 million. Dame Sharon White, the chair at John Lewis, has said that they will be closing more stores. They've got a lot of stores across British high streets, most notably just a stone's throw away from where our studio is, on Oxford Circus. They've got a massive store there. Is it going to open? Is it not going to open? Those are some of the major questions, but major losses for them. I think one of the reasons why they're still keeping afloat is because of Waitrose. That's done exceptionally well over the past 12 months. It's been able to stay on as an essential retailer because they do sell lots of groceries. Also, Rolls-Royce Holdings, not the car, the aero engine maker, they've posted losses last year of up to £4 billion. That's obviously because most fleets have been grounded. But surprise, surprise, they're still one of the biggest risers on the FTSE this morning. And that's because they are expecting a better year, even though they will be incurring about £2 billion worth of losses in 2021.
Oh, thank you so much, Juliana. Have a great day ahead. Well, now let's go from London to the crypto space with Laddie Williams.
From London to crypto. Hello, Amy. Well, the market is not looking bad. Bitcoin seems to be struggling to break that 60K barrier. It got as high as 57K, got rejected down to about 54,000 now. Was trading around 55,000 earlier today. The market cap $1.7 trillion, up 2.13%. 24-hour volume is down 8%, $121.99 billion. The Bitcoin dominance 61.07%, up 0.83%. We should keep an eye on this Bitcoin dominance because that means the alt parties will be over if this goes higher than this. Let's look at the price of Bitcoin at 8 a.m., 55,447, up 3%. 24-hour volume, $53.01 billion. Price Price of Ethereum, $1,782 at 8 a.m. this morning, down about 1.13%. 24-hour volume, $22.73 billion. Let's look at the top alts by market cap. We have BNB up about 0.42%. $281. This has had an incredible run this year. It was about, last year was about $5 to get one BNB. This is trading at 281. Incredible rise. And we have ADA up, down 1.92%. That has had a good run too. XRP down 2.23%. 0.45 cents. Let's talk to Wilfred now to make sense of this market. Hello, Wilfred.
Hello, Ladi. Good morning.
Good morning. Great to have you, Wilfred. So we have a Bitcoin at $1 trillion market cap. How high do you expect it to go?
Yeah, I am having this opinion that the Bitcoin market is undergoing a make it or break it a moment with all the media attention it is getting and all the backing it has gotten from traditional financial institutions. So if Bitcoin does succeed with all the backing that it has gotten in the last few months, we can expect to see numbers that are either twice or triple of what we are having right now. I think it's trading currently just above the $5,000.
All right, the 60K barrier is looking hard to break right now. Where do you see it going?
Yeah.
Hello, Wilfred.
Yeah, it's almost inevitable that the setback, but once the market is studying again, it was just a few weeks ago that we were talking about 60K. So 60K.
Hello, Wilfred. Seems to have network issues there. Wilfred, if you can hear me, can you finish your thought?
Yeah, so I was saying that the current market cap and the 60K barrier is something that will definitely break.
All right, looks like we're having network issues there with Wilfred, but it's okay. We have XRP. XRP have that lawsuit still battling at the moment, so we don't know what might happen. If XRP Ripple win the lawsuit, we would see a rise in this price, but if they lose to the SEC, then we might see a massive dump there. Top 5 gainers, T-Fuel, 28 cents, up 53.70% this morning. H-Bar, Hedera Hash Graph, up 19.93%. So Ini and Chimi, it's not looking bad in the alt markets this morning.
Yeah, not looking bad. I mean, if we have BNB that was just $5 last year, now it's over $200. I don't see anything bad.
Incredible rise.
I got what you said there, Ladi. You talked about alt parties might just be over, and we have to look at the Bitcoin dominance before these alt parties are over. So what is your coin pick there? So if we can perhaps, people that might want to position.
But always remember, it's not financial advice.
Oh, we know.
It's not financial advice.
What's your coin pick?
Well, for me, I'll be looking at ZRX because that has not actually had a run recently. So there's a possibility we might have a party there.
Okay, let's see how that goes. And let's, perhaps before the week runs out, Bitcoin might probably hit the 60.
It just
once
might.
Again.
It just might break 60K.
I mean, because it's done it before.
All right, that's it on the program. Thank you for watching. I'm Chimeze Obi Iwagu.
And I'm Ini John Mekwa.